Ladies and gentlemen of the crypto space, we're live on a Wednesday, January 12th at 11:07 a.m. We're going to try and get as much packed into the amount of time that I have as best possible. The market activity is massive. There was basically a showdown on Friday with the bond market, and the short end and the long end were breaching long-term moving average resistance, and the 10-year got stopped. So, and we see a directionality course change with the dollar as well. So, what we saw on Friday, let's get it over to the main screen and dig right in today. That's Convex, but we're going to flip over to the 10-year. Where is it? So that was a big stop on 50 SMA on the monthly, coming off a massive inverse head and shoulders. Clearly, the neckline is significantly skewed, but nonetheless, also coincides with a cup and handle type of formation. And it got stopped out. So what do you see here is bond yields getting held down by the 50 SMA on the monthly, and then if you go over to the DXY, you see the dollar retreating as well. So when you see bond yields up and the dollar up, that means collateral is being sold, likely because of dollar demand to meet dollar-denominated debt obligations. So what we're seeing is a bit of a stabilization of the market right now, with bonds being bought. They're not needing to liquidate collateral to meet their fiat obligations, and the demand on the dollar is retreating. Get my dog 1 second. The demand on the dollar is retreating, and that is stabilizing the markets. Then we go over to ES. We'll look at S&P futures. Coming off yet another 100 SMA mean regression on the daily. It pushed above this line, which is probably some of the flattest market activity I've seen in quite a while. You could go back probably months, if not to 2015, 2016, to see such flat market activity. But it pushed back above that green horizontal line you see there, and it briefly pushed above the 10 SMA on the daily. There's no breakout yet, but this is looking like a strength setup, which is extraordinary because the second you zoom out and you look at things on the weekly, you're like, what the heck? What the heck? And there you go out to the monthly. So it's clearly a perverted market. That's completely besides the point. But this isn't a shooting star. This is just a fat hammer at the top. It's like how Sven says, no better time to find the bottom, and he points to like the monthly or whatever very high time frame chart he looks at. He's like, yeah, this is a great bottom. This is a ridiculous bottom. There has been no retrace. There's no price discovery as we see in the crypto space, and a curve chart with a huge amount of its capital liquidity is a great example of retraces that we've had. Nope, 30-minute too long. Let's go down to the daily. And you see, you got great volatility. So people historically criticize the crypto space for being extremely volatile, but I would say the more perverted chart is is the equity indexes. This is just ridiculous. They complain about this. There may be a flip in sentiment in legacy finance traders. Like, I'm not going to play a market like this. I want to play a market that's real, where I could get some alpha and find the bottom, and it rips 20% to the upside. That's more of a natural market. There's actual price discovery based on market sentiment, price action directionality, and technical innovations. We could actually do fundamental due diligence and see what's going on with an asset and what could be a catalyst for a trend reversal. You're not seeing there's shit on this chart. There's absolutely nothing. There's no trend reversal. There's no catalyst. This is basically just excess capital. This is just a manifestation of excess capital, and you're looking for a risk off or continuation, and you look basically in a combination of the bond market and the dollar for the shit to hit the fan. If the shit hits the fan, so this market is forward looking. So if the equities market thinks shit's going to hit the fan, what you're going to do is you're going to see a precipitous drop in bond yields. You'll see risk off, which is the classic risk off, where capital allocators are taking capital away from the equities markets and reallocating to a safe haven, which would either be the dollar or bonds, and probably bonds. That's the historic 60-40 portfolio construction, and maybe that changes. Maybe it's more dollars than bonds, and equities market rolls over and you don't see a sharp drop in bonds. I don't know. Who knows how things are going to play out, but that's historically how it happens. As you can see here, this is January 2020. Look, entire January of 2020, saw a strong drop in yields, and then February, you see it fall through previous support and get driven down strongly, and then clearly, then you had March of 2020 where the entire market capitulated. So that was just this. These yields got crushed. I mean, look where you were. You were at 1.9 and it got crushed with a wick down to 0.3. This is an extraordinary crushing of yields. Bonds were bought hand over fist. So when you see, what is this? That's 18, but where's 19? September 19. Look, September 19. It's August. That's strange because I'm looking at September 19 because that was when the system started to convulse, where commercial banks pulled out of the repo markets, and clearly that went tits up in September of 2019. And this was really the start of the shit show. Or maybe folks would say bond yields hitting the 200 SMA is the start of the shit show. That's a perfect example. Anytime you see bond yields break out, which is why everyone's looking at inflation, if inflation gets too strong and bond vigilantes, whatever, or just everyone's dumping bonds because they're worthless, meaning they're only good for collateral, but they have negative real rates that are extremely strong. And they're dumping them. So if too much bonds are dumped, you'll see a breakout in yields. And every time it pushes up against long-term moving averages, the system starts to convulse. And you see that throughout history. And that's when they come down sharply. And that's exactly why this chart looks the way it does. Every time yields get too high, the system convulses. So if you see so that's what you're looking for in the bond market, either a strong impulse to the upside or a strong impulse to the downside. A strong impulse to the upside indicates collateral shortfall, and folks are liquidating bonds around the world to feed the dollar beast, and that means dollar shortage. That's reason for the system to convulse. Or if bond yields come down strongly, that means people are piling into bonds, fearing risk assets correcting significantly. So anything sharp to the upside or sharp to the downside is a great forecast of really carving out a significant piece of optionality. It doesn't mean liquidate all positions. I have no intention of liquidating all positions, but what you want to do is you want to carve out significant optionality such that you can make choices and decisions based on how the market starts to stabilize. Where is the capital going? I always say it's not the crash that concerns me. You want to carve out the optionality if it looks like you're going to have a significant correction, but it's where the capital is going to go after the system corrects. And you see that, where's ES? Oop. I mean, look where the system corrected to the 100 SMA on the monthly in March of 2020. The big crash that we had, that everyone talks about, the coronavirus crash, was a 100 SMA mean regression on the monthly. That's all it was. And then they intervene. Of course they'd intervene. Can you imagine a 100 SMA mean regression on the monthly from 4,700 to 2,700? The system would be screaming. Enterprise would be crushed. GDP would be crushed. And the system, they can't tolerate it. The system would unravel. The support structures would unravel if the market just evacuated equities markets from this height. So that's the deal. So when we see this kind of volatility, it'll carry right over into the crypto space. So we take the same type of positioning and same type of consideration, carve out the optionality. Where's the capital going to go? Consolidate, concentrate into the strongest positions, cut the losers, and all the stuff that we talk about that helps us make better decisions. Let's see who's in the stream. Tyler's here. Good day, Noah. Crypto bets. We're back, Captain. Yeah, Geist is doing well. I don't tabulate it, part of the accounts, right about now. But let's take a look real quick. Oop, what's it at? Damn, 57 cents? Okay, crypto bets. Damn. Well, that's refreshing to see. Okay. Yes, maybe they're front running the Andre multi-chain drop. I don't know. I don't know, but whatever it is, it's nice to see. Not going to argue. I mean, this was hammered pretty bad. We'll go through the charts. Let's see who else is in the stream. Liv W, good morning. This is very Phantom season. I think folks are underestimating the potential of what could play out on Phantom. Frankly, I think the strongest L2s are Phantom and Avalanche thus far. We don't have Cosmos and Polkadot in the mix yet, but they have the potential to release very strong L2s or L1s or basically other chains that do have EVM compatibility or comparable contract support. Um, Arbitrum is a pain in the neck, in my opinion, thus far. From a functional standpoint, from a technical standpoint, it's obviously innovative and very meaningful and powerful. But I just Phantom and Avalanche have extremely better performance and just stronger narratives behind it. Doe, I hope the sound is good. Thanks, Anon. Crypto Guy. Yep, liking the move on Geist. Yeah, this is I wouldn't add to a position. I wouldn't take out the position. I chose the position. The most important thing I tell everyone is own the damn position. If you took a position, own it. I expected the shit to depreciate. It's the hyperinflationary emissions. It was what I bought into. And speculatively, hyperinflation could stabilize meaningfully if there's enough deflationary counterforces, which is exactly what we see between the curve convex relationship. So, and that may be what's playing out. I don't know. But I own that position. And unless a narrative is completely invalidated, you don't exit a position. If a narrative is encroached upon, you recalculate, you rebalance the portfolio. Um, you know, critical mass and momentum are meaningful. So you can have a great asset. This is just another fun fact. You can have a great asset that just hasn't reached critical mass. So might be a very powerful protocol technology, but it's just not there yet. And that's always considerable to exit. Maybe it was just too early, and that's okay. It's not a knock on the technology. It's just it's going to take some more time to reach critical mass. I can think of a variety of assets that fit that criteria. Chilled and baked. Hello, Dan, my man. Early start today. Yeah, I got a meeting at 12 o'clock. Chilled and baked. Good to see you, mate. As always, what do you think of Rye? It's not on my radar at the moment. It's just not. Um, oop, where'd it go? I moved too fast. Let me find where I was talking. Hey, did you hear that Andre is allocating his new project token to the top 20 by TVL and Phantom? Yes, I'm currently probably most interested in what's going to play out there. I think what he's introduced from a tokenomic standpoint has the potential to meaningfully affect, if not disrupt, a good part of the entire DeFi space. The tokenomics is iterative. Uh, it's based on what we've learned from the convex curve relationship as well as Olympus DAO tokenomics, and it's just superior. It's probably the biggest innovation on the horizon. Um, I talk about what's going on a lot in our Discord forum, and I tend to be restrained a bit on when talking on YouTube. So multi-chain is quite interesting. It's just something that he's working on. There's been a lot of posts, a lot of tweets, a lot of talk about what it can do with regard to cross-chain swapping and one transaction, so on and so forth. So I think that's quite interesting. And I think it has the potential to influence the directionality of other projects. Now, bear in mind, other projects still have significant moats. And for instance, if there's a cross-chain DEX in the works, for how does that relate to Curve? So what does Curve have? Curve has a moat. Curve combined with Convex, Curve unto itself doesn't, but because of Convex, Convex adds the deflationary pressures necessary to stabilize the currency, which the combination between convex and curve is probably the closest thing I've ever seen to MMT. So you have a hyperinflationary currency and you have deflationary pressures to balance the hyperinflation. And so I would call curve an MMT currency producer. So what the biggest moat that curve has is its capacity to print capital, and the inflation is balanced, so it's not hyper inflating with regard to price depreciation, but the curve gauges are basically an incredibly capital efficient way to drive deep liquidity for a new asset. So you bribe a gauge and you're able to like a new project coming online, for it to reach critical mass, you need deep liquidity. You could achieve the deep liquidity in a capital efficient fashion with bribes and other and putting a vote for a gauge. But I think V2 gauges, I don't know how this is all going to play out. I'm sure Curve is iterating meaningfully on how this is all coded. So I don't see full-on disruption of many things, but I do see things getting influenced basically in the next couple of weeks probably. Um, let's scroll down. Dawdles, yeah, I probably have lag on network connectivity. I know my computer's running hot. I got some fans coming. Do the best I can. As long as you guys could hear me, that's all that matters. Joe Pappas, have you seen the Renovant Credidium collateral asset for CUSD? Totally off the radar, my friend. Not on my radar right now. Larry M, 20% haircut on curve you took is pretty substantial. What's your rationale? Well, is this something I mentioned in Discord? I'm not totally. I don't like broadcasting every single move I do, my friend. But I'll talk to it now that it was mentioned. It's exactly what I just said. I expect Curve to have a strong moat. In the coming weeks, we'll know more about the narratives, but it is a powerful, powerful moat because it's an MMT currency producer and has a capacity to drive deep liquidity for an asset in a capital efficient fashion. Um, and I wanted to free up capital for one, optionality, two, to pad other positions, to lean into other positions that have very strong narratives currently, and the narratives look like they're strengthening, and that just all makes complete rational sense. Is that multi-chain could emerge to become a superior to Curve? I hope I clarified very specifically prior to answering this question. Um, it's not superior. It has better tokenomics, but something better doesn't necessarily disrupt something that already exists. And I talked very specifically about Curve's extremely strong moat. So, for clarity's sake, Curve is still my largest position, considering the 20% haircut. So, I hope that clarifies a variety of things. Prefer to keep some of those subtleties that I discuss on Discord a little private. More than happy to say, yeah, I trim curve, but a 20% haircut might influence other people. And the last thing I want to do is influence other people. I want the whole purpose of this channel, boys and girls, isn't for you boys and girls, to know what I do, just to know why I do what I do. And what rationale do I put into making these extremely critical decisions? I don't make fast decisions. I make decisions only after extensive due diligence, significant confluence suggesting directionality change and narrative change, holistically looking at the crypto space, how shit's evolving. It's not, oh, I trimmed 20%. Everyone should trim 20%. That makes absolutely no sense, because what I do may not work out. Maybe I'm wrong on what I'm thinking. It's very possibly the case. There's no rational reason to say exactly what I'm doing is going to produce the best results. So don't follow me and make mistakes. That's the last thing anyone should do. Define your narratives, follow your rules, be rational, take slow, decisive actions. Only do things when a narrative is either confirmed, validated, or modified. It's very important, guys. Live W is probably very cool. It's all good. Like for instance, if there's something that's a baby spell and you got spell, that would be diversification. And I'm not a fan of diversification uh, lately. I'm more of a fan of concentration. so on and so forth. Igor's in the house, always a pleasure. Crypto 2 Multi-Chain is the rebranded name, mate. Yes, Multi-Chain is a rebranded AnySwap. Multi-Chain has slurped AnySwap in many regards. Multi-Chain has $60 million worth of funding from Binance and others. Multi-Chain was originally created as multichain.xyz by Andre. Multi-chain recently announced has a capacity for cross-chain swaps in a single transaction. They're likely heading down the road of a DEX that has cross-chain functionality. They have $4.6 billion of TVL, and things point to slippage-free cross-chain swaps. That's what it looks like it's pointing to at this point. Darren, VeChain released VUSD 2 days ago. What are your thoughts? Completely off my radar, my friend. They need cross-chain functionality. They need to get in with multi-chain so they could get capital flow across the chains. A chain unto itself does nothing. A chain integrated with the network of chains has potential for monetary velocity. It's all about monetary velocity. If capital isn't flowing, it's just boring. So that's all that matters. Quantified. Damn, I was going to allocate to Geist yesterday. Shoulda, woulda, coulda. That's the story. It's okay to miss getting a position. You don't FOMO. You want to front run the herd, as I often say. And it's okay not to own something you want to own. Dan, regarding strong L1s near its ecosystem, near is actually interesting because it was recently integrated into the BSN. So you guys know I talk about the China narrative, folks that have followed me for a while, and any of the networks in the BSN have a narrative. The strength of the narrative is another story. Clearly, Ethereum has a different strength than IrisNet, which is integrated into the BSN, but IrisNet is part of the Cosmos Hub network, and we know that the Cosmos Hubs have complete native interchain functionality with the IBC and the Stargate implementation. So that's a strong narrative, but it's probably stronger than Algorand. It doesn't have critical mass yet, and other stuff. Neo, I think, is in there. I don't know. There's no cross-chain functionality there, so there's no monetary velocity. There's no capital flow. So that's the deal. Near is up in the BSN, and that is quite meaningful. Booster Cap, I'm not sure if you can relate, but I feel really bad that I sold on my Spirit early when I was up 50%. Obviously, it pumped 100%, still going now, but I don't have conviction in Spirit. That's okay. One, the most important thing is if you have a position, you need to have ridiculous conviction in it. Don't have something if you don't believe in it. And don't believe in it just because you want to believe in it. Don't believe in something merely because you want to hodl it and you hope that it goes somewhere. You need confluence suggesting you're right. You need rationality suggesting you're not being unreasonable. You want to look for the shit that we always talk about. Capital flow, monetary velocity. When you're looking at the monetary policy of a protocol, sure, it could be inflationary, and that's fine. History is filled with inflationary monetary policies. What you want to make sure is that it's rationally deflationary, such that the system isn't going to implode on itself. Time and time again in 2020 and 2021, we saw pool twos get completely destroyed because they were hyperinflationary. It was garbage. It was just nothing to them, nothing substantive. You want a stabilized monetary policy as per historic standards. The only way to digest the crypto space is to think like a damn central banker, which is what's so fascinating, which is why we're looking at bonds and currency and trying to put the whole system into perspective. And why would capital flow to the crypto space? Because we know capital flows from underperforming assets to outperforming assets. That's the deal. That's the way it works. And that's based on psychology and human nature. It's nothing to do with crypto necessarily. This is just a market with technology that it gives people exposure to price action, to capital flow, to market sentiment. And maybe a lot of 80s veteran traders want to hit the crypto space hard because of the volatility. They want that very fast directionality. And they miss that because where the hell's the volatility in this? There's no volatility in this. Look at this thing. It's just straight up. This is useless. There's no betting. There's no edge. There's no alpha in this shit. It's buy the dip. This is what Sven complains so much about. And I appreciate that now more than ever. I appreciate the damn volatility in the crypto space. It allows people that peer through the madness, like what we do, to outperform over long time horizons. Why? Because if you zoom out on the weekly on curve, um, it's just up. Literally, it's just up. You watch a massive depreciation candle here, but if you were able to stomach this, you see now that the directionality is literally just up. So I'm going to be quite intrigued to see, because from a technical standpoint, things tend to move and keep moving in a particular direction. They have momentum. Clearly, they have a moat. The narrative is completely unaffected thus far. This is stronger than ever. That's the deal. Booster and was scared it will dump hard. Yes, this fear drives us to do things that don't necessarily work out optimally. Fear is irrelevant. What's pertinent is the fundamentals I discuss. The narrative, you look for invalidation or disruption or influence to a narrative. You look for confluence suggesting reasons to have conviction in a narrative. You look for the monetary properties of a protocol. They need to be sound monetary properties, not like sound money. That's another story. Be an interesting conversation. How does sound money relate to the monetary policy that DeFi has created? It's extraordinary. Listen, in DeFi, there's clearly inflation and deflation and monetary velocity. So these are properties of historic financial systems. But here's the kicker. The amount of monetary policy evolution that has occurred in DeFi probably exceeds the monetary policy evolution throughout history of central banking. It's just extraordinary, the monetary policy experimentation that has occurred in DeFi. I mean, what do you get? A monetary policy every 50,000 years in legacy finance? I think the US government has gone through like 6 iterations of the dollar in the last 100 years. Six. There's been 6 new monetary policies in the crypto space in the last 15 minutes. Ha! That's crazy stuff. Dawdles, the audio's probably all messed up. I got to get some fans on my computer, and it'll be better next time. Apologies. Booster. Now I feel like I was stupid and made dumb mistake for not holding longer. Don't feel dumb. You will do better next time. Kingsley, very interesting. Very interesting. We'll see, and I'm sure we'll see sooner than later. Harshal, how much do you earn on Keeper? Not much. It's not a very profitable position. I mean, Keeper DAO? Keeper? KP3R? Oh, that's actually quite lucrative. I think that's what you mean. There's a lot of keepers nowadays. Um, I, th- I think it's calculated. I don't know. I think it's like 80 to 100%. Don't quote me on that. It's not displayed, but folks on Twitter have done some rough calculations. Just Twitter search rough KP3R calculation. I don't know. It's somewhere around there. First time catching the stream live. Thank you for all the great content you have been putting out. You are very welcome, Kentucky. It's a pleasure. Raul, hello. Hi. I got the stiffest damn neck today. I don't even know how I'm sitting in this chair. Woo! Austin, Captain, what's your take on the Phantom Euphoria right now? It's extraordinary. Every little protocol there is pumping for 80%. Feels like a lot of FOMO money going in. Did you partake? No, but I'm prepared. I have I have 5.5%. I have a 5% cash position denominated in MIM sitting on Phantom, looking for a position. And I don't look for capital gains. I have no interest in capital gains. That shit drives me nuts. It's just perverted. Buy low, sell high, give the government 30%. That's fucking retarded. I want a position that pays me, that I don't have capital gains, I have unrealized capital gains, and I have an income stream over a period of time, hopefully in perpetuity. That's the only type of play that I have interest in. I have no interest in capital gains. I'm done with that shit. That shit is a waste of time and effort, in my opinion. The big people, the big boys, are incomers. Warren Buffett is the OG incomer. So everything's ripping. So I'm not going to buy something that's up 80%. But I have positions. I have that Geist position. I have a new position. Maybe you see the icon. I'm not going to make mention of it. We'll see how things play out there. Um, but that's the deal. But I have optionality. I have optionality based on how the directionality of the assets on the platform play out and the sentiment and so on and so forth. Malcolm, any thoughts on looks? No interest, off the radar. Will, hope you're doing well. How are we feeling about the rebound? Head fake and it goes back to chop or full on bull? Uh, I don't believe in full on bulls, and I don't believe in talking uncertainties as such. What I know is we see strength. What I know is the curve chart held the TWAP on the weekly. Let's take a look at Convex real quick. I know that Convex held the TWAP on the weekly, and this is a nice sign of a reversal candle. You need 4 days left for the weekly close. I look for weekly closes mostly nowadays. This is a nice sign of a reversal candle after a downtrend. It's a hammer. Let's take a look at Spell. Spell's got a massive symmetrical compression, lower highs, higher lows. Uh, didn't really hold. Did it hold the TWAP on the daily? No, it didn't hold the TWAP on the day. It didn't hold. It held the 200 EMA and the yellow here is the 200 SMA. Yeah, it held the 200 moving averages on the daily, and if you go out to the weekly, it's below the TWAP. I was hoping for it to hold the TWAP. I was hoping for it to hold the 10 SMA because it was riding the 10 SMA, this red line, for quite a while. But what do you got here? You got higher lows and lower highs, which is very obvious triangular compression. It held the bottom bar of the fork, and this is just absolutely gigantic fork. So this price point right here, this green line, I'd like to see it get above it. So if you see something like this, that is extremely bullish if you get above that green line. That is a historic price point. That is a failed breakout. That is a failed breakout with the capitulation top. The irrational exuberance that took us all the way up there. There's a failed breakout, a failed breakout, a failed breakout. So basically, the 2.5 cent line is one heck of a price point for this asset to breach to the upside. It literally, that's a ceiling right now. You can maybe even think of this as an ascending triangle with the higher lows and just that price point as a ceiling because it's got 1, 2, 3, 4, 5, 6, 8 weeks of failed breakouts above that price point. That's the deal. Let's keep it going. Heard Andre's project will come to AVAX, speculative, but that'd be intriguing. Multi-chain is on all the chains for what it's worth. Austin, everything I read so far is that it's better to hold CVX than CRV. Do you agree? I know that I've read Tetranode. I've read his opinions. I agree with him. I also agree with my opinions. So what does that mean? That means we'll only know in hindsight which outperforms more, curve or convex over time. There's plenty of reasons that I'm not going to digress into. I only have a couple minutes left of why curve is extremely profitable. It pays a lot, and why convex pays a lot with the bribes. Tetra says the bribes have no top. Neither does the yield on CVX-CRV because the yield on CVX-CRV is denominated in CRV as well as CVX. So if CVX rips in price, the yield on CVX-CRV goes basically vertical. And if the volume through the curve platform goes up, so does the yield on CVX-CRV because that is one of the three components that constitutes the yield. So we'll only know in hindsight how that plays out, and I look forward to better understanding how the new tokenomics narratives emerging in the crypto space affects older, entrenched tokenomics implementations that have moats at this point. So this is very, very interesting times. Mike, yes, show us the way, the force, not just copy you, Jedi Noah. Do not copy me. You know why? Don't copy me. If you did the portfolio balance that I have, it's probably bad. Never ever copy someone's portfolio balance. If you're looking through whale accounts on Zapper or Etherscan, you don't do their implementation. You have no idea how they got to that portfolio balance. Maybe my curve position, which is the largest position of my portfolio, was the 15th position in the portfolio. Maybe it was a tiny, tiny position that went from rank 15 to rank 1. You don't buy at rank 1. You want something, and this is exactly why I say 1% to 10% changes everything. 1% to 10%, and then 10% does another 10x. Then you got that's how your portfolio emerges. You plant seeds and you let this shit grow, emerge naturally, organically, and that's a portfolio. Tyler, letting a portfolio be what it wants to be has been some of the best advice you have given. It's vague, but it's easy to tell when you are forcing something. Boom! Woo! That's good stuff right there. That's it. If you force it, if you try and force it, price appreciation or position size, it just comes back to haunt you. Follow the rules, and your portfolio will be your friend and not your enemy. You know, the market's volatile. All right, I'm 90% cash. I'm just speaking hypothetically. And you got 10% of the market. 1% plays. If 1%, one of them goes big, all right, great. If the market shits itself, you're 90% cash. But you're starting to branch out. Like if you're a new participant in the space, for the love of God, stay cash and start to dabble. Dabble until you find comfort and conviction. You start to define narratives. You start to see the narratives between different assets and the synergies and relationships between them. You're able to see the influences that one asset has on another. And the whole market moves harmoniously in ebbs and flows. Ooh. And that's how you're able to take increasing risk on positions, so on and so forth. You don't want to take a damn risk on position if you got no experience with this shit. That's how the market chews you up and shits you out. Because what? You see an asset that's up 50%. It's up 50% because some whale got in, and then everyone else FOMO'd in. The asset goes up another 100%, and the whale just cranks out 150% return on $10 million. That's exactly what happens. Time and time again. No bueno zone. Don't do that. Don't do that. Bear in mind, there is an interesting thing occurring with Frog Nation and some very large players in the crypto space. There's a lot of whales, a lot of people throwing around 7, 8, 9 figures that don't have bad intentions nowadays. They actually have constructive intentions. They want to see protocols emerge and build and grow and affect the space. And there's honorable intentions being expressed nowadays. It's not just pure capitalism. It's not just survival of the fittest. I got what I got as long as I got it. As long as I got it, I hold on to it. It's not like that anymore. That was pure 2017 shit. This isn't 2017 anymore. This is 2022. And there's a lot of things changing. Bancor V3 is a big deal, Jordan. I have a micro position. It doesn't have momentum. It historically is very volatile, big rips to the upside, market retraces, no real directionality. The technology is brilliant. These boys have been doing this shit since 2017. They're old school veterans. So I'm really excited for it. And I'm going to want to assess if there's any opportunity cost with my current positions. Maybe reallocation is warranted. I don't know. I have no opinion right now with regard to choices I might take. I do have an opinion that I'm quite interested in what they release and how the market reacts to it. David's in the house. Stop pumping FXS. So I get in. Well, interestingly enough, like I talk about new tokenomics, V3x3. It's just iterative, evolutionary, revolutionary. It's just the next step. It's some serious shit. Doesn't invalidate. Uh, oh, my computer's still good. It doesn't invalidate old tokenomics. So it influences old tokenomics. It doesn't invalidate them. So I don't think the Frax narrative is literally influenced at all. I mean, this chart just looks ridiculous. 41.26. Jesus. This thing's going to break at some point. The Frax narrative is extremely strong. And that's just what the price has been showing us. I think the software that Sam's going to come out with is going to be quite meaningful. That's the deal. You know, it's just obvious. Like, look, if someone new to this crypto space says, "Oh, no one talked about Frax," this is not necessarily when you buy. this might not be a good time. This is not a breakout. Oh, it's going to hurt pretty hard if it falls down to 33, or dare it fall down to 27 and find support. It could do that. But if you have a breakout, so this is where you look for stuff like this. My point being, a breakout retest and a higher high is a trifecta of confluence suggesting bullish continuation. Bear in mind, getting a position of like this price, this is extremely appreciated. You're getting significantly less FXS compared to someone that bought at $3. So you have a small position relative to someone that bought at $3, which means the market's probably going to the market tends to get more volatile as it goes up in price, especially in the crypto space where there's actual real price discovery, of which doesn't fucking exist in legacy equities markets. Malcolm looks currently paying 350%, 500% in looks. It sounds good. I like those numbers. I like those numbers, but numbers don't mean much to me. I might even just overlook it because I just don't want to take on another position. I don't have the time to track another position. Geist still printing. Yeah. Geist has been doing pretty good. I'm quite surprised to see the price appreciation of Geist. 58. Woo woo. It was a spec bet. I mean, dude, Blizz is getting hammered, so there's no profit here. I PROPHET. I'm no profit, my man. Blizz is hammered, and it's basically a fork of Geist. So sometimes you take a spec play, 1%. Geist, this was a 1% position. I know it's a large number, but it was a 1% play. So just remember that. Just remember 1%. You don't gamble. Like I guess someone told me they took like 30% of their portfolio into Blizz or Geist and it got hammered. Don't do it to yourselves. I have a balance that I have, and I don't do that. I take 1% positions. Gotta follow the rules. Otherwise, there's excessive risk, and bear in mind, there are sharks in these damn waters. I've heard Cream and I heard Bantag tweeted something. It got hammered. It just got exploited. It just has no momentum at the moment. It could turn around. Look, Yearn's turning around, obviously. That was big hotness on social media for a bit. Live, be careful with the looks. APR is going down. Careful with red herrings. Uh, APR is a massive red herring. It's distracting from what's most important, which is the fundamentals, the longevity, the sustainability of the protocol. Curve did quite well despite going down to mid 30s again. CVX did quite well. No, this chart looks ridiculous, dude. It's above the TWAP on the weekly. Look at the fork. See, this is why the volatility in the crypto space is distracting. Sure, Tetranode pushes the markets around, but he's not. No one's big enough to affect the directionality of the market. And if they are, that's not an asset you want to partake in. The directionality of this chart is up. It's volatile. I don't give a crap about a 40%, whatever the hell this is. I don't care. That's all peer through the madness. That's 2 years worth of YouTube trying to teach you guys to peer through the madness. You guys zoom the fuck out. So if this breaks TWAP to the downside, you have a narrative invalidation, you have supports that flip resistance, then you have a directionality shift. But the directionality of this asset is upward. That's the deal. Shisha, you're very welcome. Not a profit, not a profit. Wash trading is profitable at the moment. Wash trading is also illegal in 2022. Quantified, more tantalized by opportunity of keeper, or more so capitalized by keeper or FXS. I don't want to make choices. I don't want to suggest one over the other, but I have a position in both. If it means anything, my choice is probably subjective, but I have 23% of the portfolio is FXS right now. Keeper's at 3%. Doesn't mean shit, guys. I swear, that doesn't mean anything. You could easily flip it around and have 23% keeper and 3% FXS, and you might do better than me. I'm telling you right now, just don't. what I do isn't necessarily right. It's worked thus far, but it doesn't mean shit about anything going forward. Trust me. Miss Hacker, hey. Hey, Noah, what do you think about DPX? I think Tetranote. I think it's a big deal. Uh, GMX and GLP catch my fancy, and Dopex is cool. I mean, it's Tetranode's baby. I know a lot of boys getting in GMX. I'm considering a position as well. Malcolm, OS has no way of incentivized trading. Yeah, OpenSea, NFTs. I got my NFTs. I don't think that I'm interested in monetary policy and monetary tokenomics. Tetra and Kobe stream tomorrow. Yes, it will be quantified. That's a big deal. Always good to hear those big boys talk, especially Tetra is throwing around 9+ figs. Sitting doing nothing at work currently. Super glad to catch you live. Always a pleasure. 80 people in the stream, 34 likes. We can do better. Dominic, combining your rationality with Taiki's humble farmer mentality has completely changed how I operate in the space, and it's changed everything for me. You guys are the best mentors I've had. Honored, privileged, humbled. Look, YouTube's free, boys and girls. I don't charge anything for this shit. You guys make me better. I would be nothing without the talks that we've had. You help me refine my narratives and talk things through. So you guys have made me a better person as well. Remember that, everyone. Ryan, my mentor Noah, what's up, brother? Always a pleasure. Joe, time to buy blue. Ooh, goodness gracious, please be careful. Please be careful. I mean, Geist and Blizz are still extremely hyperinflationary. I have no trust in them right now. I would not take a larger position at all. No interest in deploying capital. Thanks for the videos, Captain. Always enjoy your thoughts, mindset regarding the space. You're very welcome, Malcolm. Blizz will probably do what Geist did. That is correlation, not causation. You're correlating them because they're forks, but there is no reason to expect that to occur. Please be careful. Quantified. I learned my lesson from Blizz Cap. Twas me. Lesson learned. Quantified. My man. I'm sorry. 1%. 1%. You don't deploy unless it's something that's like, oh, like holy shit. You see the light and it's like a narrative, a strong narrative, and you're like, okay, I'm going to carve out 4%. But 1%, I mean, we saw the writing on the wall. You don't have 2,500%, 5,000% returns. You don't. It's hyperinflation. We saw it. We saw it. We called it out. We were talking about it, and what we expected to happen did happen. Syrup, what is your opinion on looks? No opinion at the moment. Wondering the narrative behind Link. Reminds me of Aave from a capital allocation standpoint. It's a boomer coin. It's a dino coin, as some nice people I know would call it, and I agree. I think Aave V3 is probably freaking massive technology. They better have some serious tokenomics. And what do I always say? An asset better pay you hand over fist. Hand over fist. Better be laying down the cash. You know, like Goodfella says, Ray Liotta says, fuck you, pay me. If lightning hits, I don't care. Fuck you, pay me. An asset better pay you. Otherwise, it's going to get sold. It's going to get sold faster than you can imagine to capitalize. So the only thing that changes, the only difference between this market and 2017 is assets are paying. They're paying people from sustainable sources of revenue, either transaction fees, protocol transaction fees, or debt interest payments. That's the difference. Assets that pay people aren't going to be sold because people want to get paid. That's the deal. Where are you making yield on FXS Tokamak? No. That's where I have sushi. I'm sorry. I'm not making yield. I have VEFXS staked on Frax, which is like 10% return, and I have the other half of my position in CVX FXS. So I better have that little tiny sushi position in the Tokamak. Asun, a pleasure. Dan, we're going to wrap this up in a minute. Same here, both. Huge eye opener experiences on both. I have my eyes open too, boys and girls. Wednesday, January 12th at 11:56 a.m. It's Always a pleasure. Always an honor to talk to you guys. There's some big stuff today. Big tokenomics changes coming to the crypto space. Not necessarily going to disrupt the historic tokenomics models, but they're going to be influenced. But the legacy tokenomics models have serious entrenchment and moats at this point. So I'm downright fascinated how things are going to play out. I look forward to talking about these topics with you in the coming days and weeks. I'm sure we're going to have some serious stuff to talk about. So, as always, tell everyone to subscribe. I will see you next time. After party on Discord. Discord is getting hot lately. We got some really smart boys and girls in there throwing out TA all over the place. We're talking narratives. It's really cool. It's a great place to be. And it's a heck of a group of people that somehow have come together in this crazy, crazy space. I will see you next time. Peace.